we know that this applies to basically every trading strategy. So what we need to do now is talk about the different types of strategies we can be doing. And we came up with another visualization or model for you to really understand this, called the trading pyramid. The reason we have this trading pyramid is because the thing is this, right? Every trader should be running a good business. And what running a good business means, right? If you just think about any business, it means that you have regular day-to-day activities that you understand very well, that you're an expert in, that generate an investment return for you, right? That make you money. These don't need to be complicated things or time-consuming things. They just need to be reliable. They need to be forecastable. They need to generate a return. And then once you're doing that, now you can look for bigger advantages, right? You can look for untapped markets. You can expand. You can do other stuff. But fundamentally, you still need to have this solid business. And that's what this pyramid visualizes for you. This is what the pyramid looks like. At the base of the pyramid, we have an idea called collecting variance risk premium from ETFs. This is the core. This is the fundamental that I'm going to actually tell you to pause this video soon and go do this. Right? If trading is open right now, if markets are open, go explore this right now once I teach you it. After that, there's event trading. So this is like earnings trading, FOMC trading, lots of different stuff. And these two things combined are the risk premiums that we sort of explore here at Predicting Alpha. There's other ones, but these are good fundamental ones for you to look at. And once you're doing these two things, like you've got a good business, right? You've got a couple different risk premiums you collect. You have some diversification. Like you're running a good book. You could actually stop there and like chill out, go spend time with your fam, whatever you want to do. But if you want to go even further, right, we have these unique stock situations. And this is like the top of the pyramid because it's a little bit more complex, higher reward, and it's no longer just a risk premium. It's actually something that we would call an inefficiency. And we're going to get into that in a little bit here. Right, risk premiums, right, we're actually going to get into it right now. Right, risk premium, thing that a good business is built on, persists for a long time. And in volatility trading, this is the compensation baked into option prices that incentivize us for selling, right? Selling puts on SPY, selling straddles on SPY, selling vol around earnings. There's lots of different stuff. Now, inefficiencies are these more unique opportunities, and they definitely will look different for each of you, depending on your like unique insights and things that you come up with. But there's still a general process we can look at. And you can think of trading inefficiencies as like the stuff you do on top of day-to-day activities to push you beyond your expected revenue target. So first, remember, get the solid portfolio up and running. That's number one. And then we spend the rest of our time looking for these types of trades. There's a really cool quote that we have that tells you how to think about this pyramid. It's we once asked a professional trader, like, what's the magic to profitable trading? And this was his response. He said, it's a poker reference, but he said, most of the time, play tight to the vest. Watch your risk closely and make enough to cover the overhead and live well. When you find an edge, like an arbitrage or a quasi-arbitrage, pile it on, hit it with everything you've got, gear it up, borrow money to play it, and keep doing it until the arb goes away, which always happens. And then spend your time looking for the next one. That's it, no magic. This shows us that even at a professional level, traders are doing this base of the pyramid stuff, the things that keep the lights on, right? This is what pays the bills and affords us the luxury of looking for bigger and better edges, right? This stuff here, selling vol on ETFs, event trading, all of these types of things are commonplace even in the professional world. There is no reason that we should not be doing it as individual traders. So I hope that sells you on the idea that these are important things to do, because now we're going to talk about doing it for ETFs. That base of the pyramid, we're going to go over exactly how to do that with the terminal. And then I'm going to ask you to pause this video and go find a trade. Share it in the community if you need to, give you feedback, but it's time to start taking some action. Remember, PA is not about just theory. This is not a place for you to sit and do research for the rest of your life. This is a place for you to come and start running a good portfolio.